Hey Braden, when should I refinance? I heard rates were coming down. Should I refinance? It's a question I'm getting so much right now, just so much. What's the point of refinancing? To save money, right? That's why most people want to do it, but that's not the only reason. There's lots of reasons why you might want to refinance. So I want you to think about this before you just call some random loan officer and say, hey, what's your rate? What's your rate, bro? You got a low rate? For whatever reason, the media has implanted in our heads that we're supposed to just call loan officers and ask what the rate is. So then it becomes this game of who has the lowest rate. We could play that game, but I'm going to show you a little bit better way because it's not just about the rate. It's about what your overall goals are. So I recently had a client reach out. He actually bought a house last year. It was October of 2023. If you know anything about mortgage rates, in the past several years, interest rates pretty much peaked in October of 2023, and that's when this guy bought a house. And this guy was one of my more qualified clients. He had a 20% down payment. We did a conventional loan. He had his shit together, and it was a nice little loan. But interest rate was still high, and so this guy reached out to me and was like, hey, should I refinance? I got questions. Well, why do you want to refinance? I don't know. Maybe it'll be a good idea. Okay. Well, ask yourself, are you trying to save money monthly? You're trying to open up that cash flow if your payment's too high and you want a lower payment? Or maybe you have too much debt. Maybe you've got some other credit card payments or student loans or auto loans getting kind of buried with all the monthly payments, but you've got a good chunk of equity. You've been in your house for a long time. You have a great interest rate and your house is a little old. It's falling around. It doesn't have a bar in it for some reason. So you need to access or you need to get some money to be able to pay for those things. Get out of debt faster. Maybe your mortgage loan is the only debt that you have. You've got 28 years left on it and you want to accelerate it and pay it off faster. And there's no wrong or right answer. Everybody's situation is different, and this is why I do these videos. I brought up some thought-provoking questions for this client of mine, and he actually didn't know how to answer that. He's like, well, I don't really know what my goals are for refinancing. I was like, okay, well, let's start with an easy one. Do you want to pay your loan off faster? Do you want to pay less monthly? He's like, well, yeah, that sounds good. I want to pay my loan off faster and pay less. Who doesn't want that? I'm like, okay, well, let's look at the numbers. Let's see if it's even possible. It's either gonna make sense or it's not gonna make sense. And that's what I tell everyone with refinancing. Let me look at it. All I need is a copy of your current mortgage statement and what your goals are, estimate credit score, and I can put something like this together. I don't even need an actual loan application if you're not ready to pull credit and get that deep into it. So let's look at this guy's current loan. Maybe this sounds like something you have, and then it will make the options that much better, right? So this guy bought a house last year. He has a current interest rate of 7.625 with a loan balance of, let's just call it $320K. It is a conventional loan. He did 20% down, so there's no mortgage insurance. So this is one of those situations where we definitely want to see a good break in the interest rate. There's no other debts that we need to pay off. This guy's in a great situation financially. He just happened to buy when interest rates were at the top of the freaking chart. Now that we know he's got kind of a higher interest rate, I'm going to show you what I presented for him. I gave him two options. So this loan details looks at an in-depth option and everything we're looking at. The first one is the existing loan, which it clearly says right there at the top. Option number one is to refinance with a rate of 5.875, down from 7.625. However, there's some additional costs with that because we are buying the rate down slightly. And then option two is with an interest rate of 6.125. It shows that we're charging a point, but I'm not. Like he gets that point back. Long story. So we basically have a loan that has a cost for a buy down and then one for no cost for the buy down. And as you can see, there's a slight difference in rate. So now looking at total monthly payments, and I looked at what this will look like 7 years from the future, because it's all math. So we're going to look at the data as if we just did absolutely nothing with his loan. Refinance number one, which is buying the rate down, and option number two, still a refinance, lower rate, but not buying it down. So less money that you're actually paying, right? So just looking at the monthly payment from his current loan compared to the one, if we do a refinance for him, he'll save just over $300 per month. But we take it a step deeper. On top of that monthly savings, we also have interest because our interest rate has gone down, at least almost 2%. What does that look like from a savings standpoint? So again, comparing the options for the buy down and the non-buy down option, you save almost $35,000 in pure interest by buying that interest rate down out the gates on this refinance compared to about $29,000 without buying it down. So either way, we're still saving right around $30K no matter which option we choose. If you did absolutely nothing, you're gonna spend an additional $30,000. So that's what I told this guy. So our monthly interest savings is now closer to $417 based on that interest over a 7-year term. The other cost I like to look at is something called your break-even cost. So if I refinance today, because refinancing does cost money, there's fees involved involved with it. Pretty minimal on my end, but again, if you're buying the rate down, that's when those fees can get a little bit higher. And then there's still the third-party fees that are around $3,000 in most scenarios, depending on, where you live and your total loan size. So for this one, the break-even cost is in 24 months, meaning that within 24 months, the amount of money that it costs to do the refinance, that's when you recoup. So it'll take 2 years to recoup that money. It's just all baked in after 2 years, right? But it'll take 2 years to get to that point. And then we look at the amortization. This is the other one that I feel like no one else talks about. If you look at that overall amortization gained over 7 years, now we're looking at almost $35,000. So we've got some massive, massive savings. Let's say this guy decided to just do nothing. I don't want to refinance at all because I think rates are going to drop even further. Okay, well, that's another easy math. So I asked this guy, because I presented this to him and he's like, you know what, that's definitely some good savings. I can see that, but I think rates might get even lower after the election or in 6 months. You know what? That's a good point. They absolutely could. There's savings now. You could take the win and be good to go, but are you missing out on future savings if you do that? He thought so, but I was able to prove him wrong. So check this out. We went ahead and just ran those numbers. I have another program where we decided to look at the actual cost of it. So let's say we refinance now. We quoted that, 5.875 rate. We know that's going to save him, $300 a month. But how much savings would it be if we waited till the rate got to 4.875? Because that's what this guy wanted. He's like, well, I really want to wait till rates get under 5. Okay, so let's say we do nothing now, we wait an additional 6 months and hope that interest rates are at 4.875. What would that look like? So absolutely, yeah, if that hypothetical situation came to fruition, if it came true, he would save $524 by dropping the rate an additional 1% than what I had quoted him instead of that $317. So yeah, a couple $100 more in savings. It's absolutely worth it to save. But did you know you can refinance as much as you want? Yeah, absolutely. There is a cost for it, so I factored that cost into it. So I went ahead and said, okay, if we don't refinance now and we wait that 6 months and the interest rate drops to that 4.875 and everything happens the way that you want it to happen, it would actually cost you more money than if you also did a refinance now and then did it again in 6 months. Because his interest rate is so high on the current one, what he's paying monthly and what he's paying in interest, it would actually cost him almost $2,000 extra by not refinancing now and still refinancing in the future. So one of the biggest questions I get is, should I refinance now or should I wait until rates get a little bit better? If you have an opportunity to save some money, if it accomplishes the goals that you're looking to accomplish and it's going to put you in a better place, absolutely take advantage of it. Do it. Why not? But again, if we don't know what it's going to look like, let's run the numbers. So in this situation, for this particular individual, he could refinance now, take the savings of the $300 per month, and then if rates do go down in another 6 months, another percent, we can refinance again, save an additional $200, and it still would cost him about $2,000 less than had he done nothing and just refinanced 6 months in the future if rates are where they want to be. Is that making sense? Makes sense, right? If you'd like to run through this exercise, if you've been shopping mortgage lenders and they're not getting into all this with you, if you're calling people and they're just quoting you a rate, let me take it a step further. Let me show you how all the math works. We can look at the long term, the short term. I don't care if some other lender already quoted you. Send me that quote. I'll look at it. I could probably do better than it, but if not, I'll be the first one to say, you know what? This guy's giving you a good deal. I can't beat that, and I'll tell you to go work with him. I do it all the time. So just know that there are so many different situations depending on what your goals are. It's not all about rate. Get that out of your head. It is part of it because obviously lower the rate, lower your monthly payment. But if your goal is to save money, pay it off faster, access that equity, whatever your goals are, refinancing could be a good opportunity for you. And if you're curious if it is, give me a call. Super easy to do. Check out my website, hit me up on any of my socials. Real quick conversation. You can schedule an appointment with me on any one of those outlets. 10 to 15 minutes, we'll have a quick conversation. Or if you don't feel like talking to me, shoot me a quick little text. Say, hey man, saw your video. Want to know if a refinance might make sense. The only thing I'm going to ask for is a copy of your mortgage statement and your estimate credit score, what your main goals are, and I can figure the rest out and I can show you how much we could possibly save. It takes 10 to 15 minutes. I'll knock it out for you, have that conversation, and if it makes sense, great. If not, whatever. What'd you lose? 10 to 15 minutes out of your day? Put your time to good use. Give me a call. Let's save you some money and make it happen.